First of all, I think the most important thing to note is that this is a very strong signal that the government is committed to bring back economic priorities, economic growth, employment as the national priority, and that itself boosts confidence. As we have seen, since the stimulus packages have been announced in September, they have been gradually expanded and enlarged, and in a very coordinated fashion, whether it's monetary fiscal stimulus, special programs for real estate, and other stock market. The first approach is to stabilize the stock market and the real estate as a matter of having, if you will, faster immediate effects. And we did see some of the impact on consumption rebound and other aspects of the economy. 8 measures, including services and confidence level investment, really having bottomed out and showing slow recovery mode. I think that has been useful, although the real question is whether this amount of stimulus and monetary policy easing will actually trickle to the real economy and actually really boost confidence, consumption, and investment in a sustained manner. And that will depend on whether this amount of stimulus is meant to reduce government deficits and remain in the financial system ultimately, or it would actually go into the real economy.
Let's focus on the average Chinese consumer. What might it mean for them, particularly those who hold mortgages?
The question is, of course, the mortgage rates have come down. Actually, if you look at the housing data, the purchases of existing properties have actually stabilized. I think it actually returned to levels a few years ago. The really big gap is the purchases of pre-sold apartments, and that reflects a lack of trust in the developers and these projects. So you can see that the demand is still there. There is demand for more purchases, but of course the real estate market has to stabilize a bit further.
What about support for Chinese businesses? Is this going to be part of the plan?
We have seen a slew of policies that are meant to support private entrepreneurs, the private sectors. I think the attitude is very well intentioned. The question is really, implementation. As we have seen in the financial system, if you look at aggregate total social financing, that has not increased despite the monetary easing and the easing of liquidity conditions. That has not amounted to more social credit on the aggregate whole. So whether it actually reaches the private sector in practice is still very much in question.
Looking internationally, China says it's open to talks around these tariffs that Donald Trump could introduce when he becomes the president of the USA. What do you think needs to happen at that level to head off a tit-for-tat tariff war?
Well, first of all, China is not interested in engaging a tariff war. It has done nothing good for either of the economies. In fact, it's given much more opportunities for other economies around the world. So China does not want to pursue that. And I think there is room for negotiation, and China is ready to negotiate further with the U.S. Now, there has been a lot of paradigm shifts since the first Trump, or the first tariff war a few years ago, where it has actually led to a frenzy of globalization, where Chinese companies going global, Chinese companies diversifying, whether it's their supply chain, their investment destinations, and their trading partners, building stronger ties with many other countries in the region, but also in the Middle East and Eastern Europe. And that is the unexpected, unintentional benefit, if you will, of the first-time trade war.